Friends, today we have with another webinar on income tax and GST compliance under IBC code. Friends, this is most asked and complicated topic, but we have with us two presenters who are IP and working in these areas. In addition, we have two stalwarts, a great personality, both in income tax, GST, and it itself is a great opportunity for us that they are with us here. So we welcome our guest here for the topic, Jayesh Bhai and Pranav Bhai. Thanks a lot, Jayesh Bhai and Pranav Bhai, for your time.
No, it's our pleasure.
Welcome here. To give brief introduction, Jayesh Dadia is a fellow member of Institute of Chartered Accountant of India for last 40 years and has extensive knowledge of Income Tax Act, audit and accounting standard. He is a founder and managing partner of a chartered accountant firm, Jayesh Dadia Associates LLP. He has worked comprehensively in the field of income tax representation in appellate proceedings, settlement commission, income tax appellate tribunal, and transfer pricing authorities. He is also specialized in corporate structuring and family settlement from efficient tax point of view. Welcome, Jayesh Bhai.
Thank you.
It's our opportunity to hear you.
Yeah.
Mr. Pranav Kapadia needs no introduction, a qualified chartered accountant with 22 years of experience. To introduce very briefly, Mr. Kapadia, among other achievements, has been president of GST Practitioner Association of Maharashtra for 2017-18, member of Indirect Tax Committee of WRC ICAI for 2019-20. He has co-authored the publication of MVAT Amnesty Scheme, Guide to Maharashtra Settlement of Areas of Tax, Interest, Penalty or Late Fee, Audience 2019, published by WRC of ICAI. Welcome, Mr. Pranav. It's our opportunity and privilege to welcome you both in this webinar. With us, the presenter is Mr. Hemendra Paliwal, a chartered accountant IP, and Mr. Devang Thakar, a CS professional, working in the finance field as well, and registered valuer and IP. Now, I'll request participants to be free to ask your questions whenever it is required. You can put in chat box. During the presentation, the panelists can intervene and put your experience, knowledge, whatever you want at any time and intervene. Now, I'll request both the panelists first to give your view on the topic for 2 minutes, and then we will start the presentation. So, over to Pranav Bhai and then Jayesh Bhai. Thank you.
Thank you very much. And I welcome again all the participants, and I thank the organizers, Mehta and Mehta company secretaries, for organizing this webinar on this very, very important topic of impact of IBC on income tax and GST proceedings. I'll just like to tell that although it mentions GST proceedings, but there are various other indirect taxation laws also which come into play, like the earlier sales tax law or the excise law, or maybe even for that matter, the profession tax law. And there are various matters which require consideration by the resolution professionals who are undergoing or who are managing the affairs of the corporate debtor, which is under insolvency. Beginning from taking registration to taking care of all the compliances and replying to the notice under GST till the company is undergoing, or maybe till the company is revived, or till the company is undergoing a liquidation. So under all these aspects, the GST aspects comes into play because it's a tax on every transaction that takes place, and there are various issues in it. The team has prepared a write-up, and as and when the issues come up, we will share our views on the same. Thank you.
So, see, introduction of IBC has taken away major power from income tax department. That is recovery of outstanding demand. So there is a huge impact on income tax recovery in view of the IBC code. And whether IBC, Mr. Paliwal will take us, what are the power available with the income tax department during pendency of CIRP and what income tax can do or cannot do, that we will throw the light, because everybody is affecting income tax in any corporate debtors, whether they have a GST or not, but corporate debtor is subject to income tax provisions. And there are so many benefits also given in income tax to the corporate debtors on the finalization of resolution plan, like carry forward of losses, then calculation of net profit, then certain benefits in carry forward and setting of losses interstate and all this. So the income tax is really to some extent diluted because of the IBC and because of that 238 provision of the IBC giving overriding effect. Income tax need to be we will discuss the interplay between income tax and IBC. Now over to Mr. Paliwal.
Yeah, we can start the presentation.
Thanks, Jayesh ji or Pranav ji, for the brief for brief impact on the GST and income tax due to implementation of IBC. Welcome all my fellow colleagues, company secretaries, CAs, and all professional for this particular seminar. To start with, when we talk about IBC, the three critical section of the IBC plays major role in the entire process. Section 7, Section 9, and Section 10. Under Section 7, IBC of financial creditors can file an application in NCLT code for the insolvency of corporate debtor. Under Section 9, operational creditor can file an application for a CD for insolvency. However, unlike the Section 7, where the default happen, financial creditor can straight take the CD to NCLT court without giving any notice. However, there is a different process in the Section 9. Under Section 8, operational creditor need to give a notice to the CD, informing that there is a undisputed outstanding there, and he need to make either payment, or if he has made the payment, they need to share the proof of those payment, or if any dispute is standing, they can raise their disputes. If there is no feedback within 10 days from a CD, operational creditor can go ahead with the filing the complaint against appeal against the NCL corporate debtor. There's another Section 10 where the company can go himself, take himself to the NCLT court for a CRP process. So these are three main sections which deal with the insolvency in our India or under IBC. Let's evaluate first where the income tax fall. As per Section 5, subsection 21, operational debt. Operational debt means a claim in respect of provision of goods or services, including employment or debt in respect of repayment of dues arising under any law for time being in force and payable to central government and state government and any local authority. That means all the government levies, whether income tax, sales tax, VAT, GST, all are the levies which are accrued in the process of the business, and these are being treated as an operational debt of the CD. Next, Kapa. There judicial pronouncement which also clear. There is a case of athlete where it has been held that income tax department of the central government and the sales tax department of the state government and locality who are entitled for dues arising out of the existing law are operational creditor within the meaning of Section 520. The Section 520 give a definition of operational creditor, a person to whom an operational debt is owed and includes any person to whom such debt has been legally assigned or transferred. What it means ki operation creditor includes if somebody assigned their debt, their liability to somebody else, their asset to somebody else, those are also be involved. They are also be said as a operation creditor, even though operation creditor assigned their receivable to a financial creditor, still those financial creditor will classify as a operational creditor only. There are another two judgments. One is from Andhra Pradesh High Court in the Leo Edible and Fit. The tax department triggered the controversy by insisting on having priority on the collection of past dues from the companies going through the resolution mechanisms, which has been turned down by the High Court. There is an enclate where the enclate held that the tax department would fall under the category of operational creator. So all judicial pronouncement has very categorically made it clear that all tax dues will fall in an operational creator category only. Come to next. When we say operational creator and when we talk about the section 7, section 9 and section 10, let's evaluate whether the tax authorities can initiate the CRP to recover the dues. Technically, as per the definition, operation creator, whether it's a tax authorities or private creators, they can initiate the CRP on a corporate data. However, tax department till this point of time never come to this recovery aspect because they have a higher recovery tools. In a normal course of business, they have a right to attest the properties. They have a right to attest the bank accounts. They can directly ask debtor to pay to the credit of the treasury of the government. So the tax authorities have a higher tools or more reliable tools where the recovery is more easier and more faster. So tax authorities will never go for IBC to recover because here they lose their seniority to recover the dues, and as per the waterfall mechanism of IBC, they fall at the level 5, and recovery possibility is very less in case of they don't get a priority.
So,
And,
Mr. Paliwal,
yes, sir.
In this case, the tax authorities
Yeah.
will never initiate CRP at all because they have so many other provisions in place to recover their monies, like attachment of bank account, attachment of property, attachment of movable debtors, etc. So, in my opinion, tax authorities will never initiate CRP for recovering their dues.
Sir, that point I wanted to make, even though they're operational creator, they can legally they can initiate, I believe, but they will not do it because you are saying there's a lot of other tools available with them.
Yeah, I have my view. According to me, I think there is one decided case where it is said that they are not operational creator, but they are other than because they are not provided goods or services.
Correct.
Okay.
That's why it is outside that way. There is one decided case according to
That's also for GST, which will come later.
Yeah. Same, both tax kind of. They are not provider of goods or services. OC is a provider of goods or services.
So as the lease rent property owners, they also can also initiate the CRP.
Right.
Okay.
Yeah, that specific provision they have made. Otherwise, earlier not, because giving on lease is not service, but now it is clarified.
Okay.
Yeah, please go ahead. Thank you.
Papa, next. Role of tax authorities. Once the CRP commences, let's see what are the role of the tax authorities. Tax authorities need to submit the claims to the IRP or RP, as the case may be, and they need to ensure the complete correctness of the all claims which they are making. And once the CRP commences, they may become a part of COC as well. Even though COC are mainly consist of financial creditor, however, if the tax liability of any CDs is in excess of 10% of total liability of the company, thus the tax department may also attend the COC meetings. However, in such COC meetings, they will not have a voting power, but they can attend the meeting and have an agenda and everything with them. The tax authority also need to engage with the ARP on ongoing compliance. So they need to ensure that the RP, ARP of their concerned CD are being compliant with the law of land and proper TDS returns and tax returns are being filed and compliant with him. So they can do follow up with at least regular compliance with RP or ARP. Wherever there is any issue between the CD, RP and company, this is a process to resolution of grievance. They can approach a first COC. If they don't get a proper hearing, they can approach a NCLT, NCLAT or Supreme Court to resolve their grievances. These are the escalation metrics which tax authorities can adopt to resolve their grievances. Rights of income tax authorities in IBC. Once the CRP commences, the tax authorities has to file their claim in Form B under CRP regulation and claim in Form C in the liquidation regulation. Once a liquidation commences, the rule little changes. That's why there is a separate form. As we already covered, if tax dues excess 10% of total debt eligible for attend the COC meeting. There is another scenario where if any company do not have any financial creditors, then the COC will consist of only operational creditor. There the tax authorities, on depending on the total outstanding, may form part of COC and may get a voting powers as well. Treatment of dues under IBC. Income tax department is not treated as secure creditor under IBC. There's various set case judgment where income tax department was holding certain attachment on the property and they were not leaving those attachments. Says since we have attached this property before the commencement of the CIRP, hence we have a first right to recover our dues from this property, which has been turned down by the NCLT court, and subsequently even the higher authority, high judicial authorities also not accepted the stand of the income tax department. Ek minute, Kripa, go to previous slide. Provision of IBC provides order of priority for distribution of offset due to central government and state government. As you all are aware, we have a section 53 which tell us how the distribution of cash to be done in liquidation. So first comes the CRP cost and liquidation cost to be paid first. Second comes to workmen's 24 months workmen's unpaid dues plus financial creditors need to be settled. Then third comes salary of employees, 12 months. Fourth comes the financial creditors, unsecured financial creditors. And fifth comes the government dues and unsecured part of financial creditor having the security exercised by him. So in entire hierarchy, they fall in the fifth category, which comes after paying the employees' dues and financial creditors' dues. IBC code to override the compliance requirement is mandated under section 178 of the Income Tax Act. As per section 238, the IBC code, wherever there is any disagreement between any other law, the IBC code prevails. We had the same situation with the income tax department as well. Now there is a specific amendment has come under 178 subsection 6, where it has been expressly given in income tax under IBC companies. The IBC code will prevail when the company is under CRP. There is no provision in the IBC to give a right of claim preferential treatment even in where the property has been attached, which have been already covered by us. This is the decided case law, Leo Edibles and Fats Limited versus Tax Recovery Officer Central Hyderabad. In the case, the Leo Edible and Fats Hyderabad High Court upheld that the income tax department cannot claim any priority only because the order of attachment issued by it prior to the initiation of liquidation proceeding under the code. Income department not being a secure creditor must necessarily take course of distribution of the liquidation of asset as per section 53 of the code. And we already discussed in the section 53, they fall at a fifth level in the distribution matrix. Once CRP commences, as soon as the NCLT give order for any CD for commencement of CRP. The moratorium also start for the CDs. During this moratorium is a period during which judicial proceeding for recovery, enforcement of security interests, sale or transfer of asset, or termination of essential contract cannot take place against the debtor. In principally, once the moratorium sets for a corporate debtor, all proceedings should stay against the company at all judicial level, all judicial proceedings, and even the transfer of assets or termination of essential contract cannot take place. IBC especially provide electricity, water suppliers need to ensure that essential supplies are being made to CD during the moratorium period. This order of moratorium remains in effect till the completion of CRP, or in case of NCLT approve the resolution plus, then the moratorium ceases or the liquidation order has been ordered for this company. Based on judicial precedents, moratorium period extend to income tax as well. Kripa, next. There is a decided case laws. One is a principal CAT versus Monet Spa and Energy Limited Supreme Court. Supreme Court dismissed the special leave petition with respect to demand raised by the tax department, citing that the court shall overriding anything inconsistent contained in any other enactment, including the income tax. That's why the section 238 comes to the rescue of the IPIRP, where there's something inconsistent with the any other act. There's another judicial pronouncement, Kitply Industries versus ACT Taxman, and cleared opinion that proceeding before the tax department is a proceeding before any other authority, and continuation of the same during the period when the moratorium is in operation is illegal in view of the prohibition rendered in section 41A of the code, and therefore same untenable in law. However, practically, my belief is that key proceedings are being undertaken by tax authorities, and do sometimes even IRP, RP do support tax officers to complete the assessments, because in certain cases, it is in the interest of CD to have this proceeding to complete it to get the refund for department, refund from departments. Jayesh bhai.
Yeah, so even the income tax department used to reopen the assessment during the CIRP period, and tribunals and some courts have come to the rescue to the corporate debtor that look, since there is a moratorium period, reopening should not have been done. But there is a latest judgment of Chennai High Court in the case of DishNet Wireless, where the court says that moratorium means recovery of dues, not stopping of exit proceedings. So let officer continue reassessment proceedings, and he should not pass the order. If he pass the order, he should not serve on the SSC corporate data. But you cannot stop investigation and reassessment proceedings of the income tax department during the CIRP period. So a tax officer can issue notice for reopening the earlier assessment during the, but anyhow, it has no final effect at all because he cannot recover demand.
Yes.
So this is the one thing. Second thing is, what happened to pending appeal before tribunal and High Court? So appeal has been filed by department or SSC before the CIRP started, but come for hearing after the CIRP is initiated and Section 7 order has been passed. What would happen to those appeals? In Bombay Tribunal and Bombay High Court are taking the view that in view of the moratorium, in view of Section 14 of the IBC, the proceedings should be either kept in abeyance or proceedings should be dismissed or disposed of without passing any order. At the same time, giving an opportunity to them come again if the corporate resolutions doesn't succeed, or the corporate plan goes to another original promoters. So they don't keep any pending appeal. They dispose of pending appeal on the ground that it is not maintainable now. Yeah.
Question in the chat box.
Yeah, tell me.
Can the brought forward losses and UAD be reassessed post acquisition of target company, and can they challenge the computation done by the then corporate debtor?
So section 79, in case of a closely held company, they have been amended that in case the company is under CIRP and on resolution plan, the provisions of that 51% original shareholding is not required. So therefore, company can carry forward losses and unabsorbed depreciations, which is assessed to be set off against future income of the company. So there is no absolutely bar. If a corporate debtor has incurred losses prior to CIRP, he can certainly carry forward and set off against future income. But provided it should be within the time limit, like losses should not be exceed more than 8 years, and unabsorbed depreciation is for unlimited period. So second issue is whether they can challenge the computation done by the then corporate debtors. No, because all these book entries have been passed as per the resolution plan approved by NCLT. So suppose in the resolution plan they mentioned that all the liabilities extinguished, all the share capital extinguished, all the debtors to be write off. So they cannot challenge. And if the computation has been done on the basis of this working, I don't think so anybody can challenge this.
Next question. Whether moratorium period will be excluded while arriving at the balance carried forward period?
No, my answer is no. No moratorium period will be allowed to be as a it cannot be excluded. It has to be from the end of the assessment year. There is no amendment, at least in the tax.
Basically, entity is going as a going concern. There is no stoppage of business. So since the entity moratorium is for the cases to be filed against the company or for a stop of the cases for ease of doing a IRP, RP to their work.
Yeah.
But for a compliance purpose, the income tax department says that we are continuing as a ongoing concern and you to file the return.
Yes. Yes.
There is a 79(2)(c) amendment which says that in case of private limited company wants to continue the carry forward losses, principal CIT or CIT need to be heard before passing the order by NCLT, but they should.
So they generally issued notice, and no CIT, principal CIT ever appeared.
Okay.
So it assumed that permission has been given.
Okay.
Okay, there is.
So I like to one more things for recovery of dues. As far as 178 concerned, yes, all department cannot recover. They are operational creditor. They have to come in the queue because of that waterfall mechanism. But in case of a closely held company, the department can approach director and recover money from them. There they have not put any amendments at all. So in case of a closely held company, directors need to be very cautious that if they cannot recover in the resolution plan, then it can be recovered from them personally. Yes, they have to prove that the entire loss, the entire demand has arisen due to their misconduct on their part.
Yeah, that was the question. Can the promoter, can they go before, after
Yes, they can
promoter
go.
for IT losses? They can.
Yeah, they can go, but very difficult for department to prove and to recover money from directors because of.
Okay. Can recovery be made from associate companies to whom loan has been granted by the company under liquidation?
No, not at all. Not at all. The recovery can be made only from the directors of the company.
Not from associate company.
Yeah, yeah. No.
No.
They are independent identities.
Correct.
Okay. And there is one more question. Who is responsible to send the notice to JCIT and PCIT in case of Section 79? Can we mention in the resolution plan that RP or NCLT should send the notice to IT department? And if RP, NCLT do not receive any response, then Section 79 stand compliant.
Yeah, so normally RPs, because when you make a plan, you have to send one copy to department also. So the RP normally sends notice that in this case, this is going to be a resolution plan. And most of the cases, commissioners, they never attend unless there's a some big profile case.
So there is also one request by the participant. Can the panelists later share a brief on impact of Sirupur paper mills versus UOI case for our guidance, especially on the rules pertaining to CDRP to communicate to IT on notice of resolution plan and giving opportunity of heard in depth in resolution plan irrespective of participation. That is the request for participant. If time permits, because we will.
Yes.
Yes.
Okay. Yeah, please go ahead.
Next slide.
Yeah, any other question?
No, we have attended.
Okay, thank you.
Compliance with during the CIP period. Once the CRP commences, RP takes over the company or CD as a RP IRP. They need to compliance with the directives laws, whether it's a TDS, whether it's a TCS, whether filing the income tax returns. They are responsible for complete compliance of the company. Yeah. While the Finance Act Section 140 of income tax has been amended, they can even assign the returns of the company. Even the companies under IBC, IRP or RP can sign the MC returns as well. There may be difficulties for RPs, IRPs for undergoing insolvency resolution proceedings to file the ROI, but they need to put their best effort to ensure the compliance has been done within the statutory due dates. As company has to do all compliance of Section 192, 194 for TDS. This I am talking all TDS during the period of CRP. Any opening TDS we are not talking at this point of time, because those are the claims remain open at the beginning of the commencement of CRP. If during the CRP, if they are paying any interest for borrowing, they need to deduct TDS and they need to comply. In case of they are borrowing from banking or financial institutions, the TDS doesn't applicable. In case of they are borrowing for NBFC or any entity which is subject to TDS, they need to comply with the TDS provision. Liquidation assessee may decide not to deposit the TDS on the interest liability because even they may deduct a TDS, but on a waterfall mechanism, the TDS will be fall in the fifth category because these are tax dues. Next.
There is a question on that fifth category waterfall.
Yeah.
If there are fifth level in the order of waterfall mechanism, how would the higher recovery mechanism be helpful implementable in such case?
No, income tax recovery cannot be done at all. It's gone.
Okay.
Yeah. You have to follow the procedures.
Okay. And there is question, if the IT go after the existing directors, is acting in good faith is a good defense for the directors?
Yeah, the directors has to establish that, look, this was a debatable issue. The loss is because of question of law, and that is not due to the negligence on the part of the management. If they establish this, then there will be no means director has to fight till High Court department will start the recovery, they'll access the bank account, but the director has to go to higher authorities or to the court and get the stay and injunction on that.
So they will do their work, you do your work.
Correct.
Okay, there is a further question. Can MAT credit be allowed in companies under CIRP?
Yeah, because
Yes.
if the corporate is a going concern, but Paliwal told me it's a going concern. So the corporate data remains the same. Only the promoter changes.
Yeah. Next, if resolution plan is passed for holding company, then whether it will apply on wholly owned company or on subsidiary company, and no demand can be raised against subsidiary company also post date of resolution plan.
See the in the resolution. See that depends on resolution plan. That what is the resolution plan says. But according to me, subsidiary company is not under CIRP. Therefore, department can go after subsidiary company and recover. But in relate to demand of subsidiary company and not because of the holding company demand.
Yes, madam. Basically, the subsidiary company has a separate director, separate management, separate bank account, and separate business.
Correct.
There could be a CRP in a holding company, but subsidiary company can continue its business independently. So nobody can stop tax department to recover their dues from subsidiary company.
Subsidiary, yeah, it's an independent entity.
Independent entity, legal entity.
Yeah. Yeah. Okay. And we are discussing GST once we give income tax. So there is a question on that, but we will take later. Yeah, please go ahead.
Deductibility of insolvency, CRP cost. Basically, these are the costs which are the in different nature. It could be professional cost. It can be your employee cost. These are the bona fide business expenses and can be claimed under section 37 of the income tax. So even we call it a CRP cost. CRP cost is nothing. Cost are incurred to run the business of the company, which are in nature of employee cost, purchase or professional cost or legal cost. Can be claimed as expenses. Next, Krupa. Short of time. Applicability of MET provision we have already covered. MET provisions are applicable as a going concern. Applicability of GAR, Jayesh Bhai will take.
You see, per se, GAR is not applicable because the entire scheme is approved by NCLT.
Yeah.
But if the department has any suspicions that the entire process to CIRP is to avoid and defraud the tax, then they can approach NCLT with a request that this is all the intention of company coming to NCLT is only to
defraud the tax
payment of taxes. Even the creditors are all related parties, they all made up creditors, and then NCLT can give an order to look into this matter. And if NCLT come to know that this is the main intention, yes, they will reject the CIRP petitions. So, and then there is no question of GAR then, since the CIRP has not been approved or cancelled or revoked, then department can act in normal course.
Thank you. Krupa, next. Overriding of effect on income tax department. We already spoke about section 238, which has an overriding effect on income tax and the consecutive necessary amendment in the income tax department. Income tax act. Next. We are short of time. Section 79 we already covered. In case of private limited, there is a provision where if any in particular previous year the more than a 50% shareholding of the company has been changed the hand, the carry forward losses cannot be continued. However, there is an exception has been done, and the section 79 subsection 2C has been inserted to give IBC court this permission, subject to principal CAT do not take objection of it. So this has been covered as well. Krupa, next. Voluntary liquidation, capital gain on distribution of surplus asset to shareholder. Deemed dividend implication on asset distributed upon accumulated profit immediately before liquidation. A voluntary liquidation is a liquidation where company itself go for liquidation where they have enough asset to take care of all liabilities. So there is no question of any haircut or short payments. So there could be excess liquidity available with the company, and they can distribute the money before the going to CRP. DDT liability now may not come because DDT is no more applicable. Less likely of have accumulated profits possible. In a voluntary liquidation, there is a possibility there could be profits and they can take it. No capital gain in the hands of the company on distribution of asset on liquidation. As we are paying back to the shareholder their money, there could be, we might be paying more than the carrying value of the shares. So there is no capital gain in the hands of the company. However, there could be capital gain in the hands of the individual. However, they need to adjust to the extent of the deemed dividend they have received from the company. So if any company in voluntary liquidation they have some payout to shareholder, then there could be capital gain subject to if any deemed dividends has been already taxed will be taken set off. And fair market value of the asset received on the date of distribution to be considered as a full value of consideration. So there is no other fair value other than the what consideration they have received from the company.
There is a question why when the company is under voluntary liquidation for the entire financial year, whether it is required to file income tax return considering there are no operations.
Yeah, the liquidator is supposed to file the return because the company is still not liquidated. It is under liquidation. So you're supposed to file your return up to date. Although there is no income, because the PAN number is still live. So if you don't file it, you will get the notice. So better file it of nil return.
Yeah. Yep.
Yes. In case of under voluntary liquidation, if there is any capital gain in the company has to pay the taxes. If any losses are there, they can adjust it if may available. Krupa, next. So there are a few judicial pronouncements which are very relevant. First was the income tax assessment during CRP Deputy Commissioner Income Tax versus Bhuvan Madan RP of Diamond Power Infrastructure Limited. NCLT held that the Insolvency and Bankruptcy Code 2000 was enacted with a view to bring about the complete recognition and insolvency resolution of the corporate debtor at the time-bound manner, and to inspire the life into a corporate debtor linked to repay its debt. Section 238 inserted in the code or provision of the section 238 overrides everything. So we have a judicial pronouncement which reinforces that section 238, which says ki section 238 has a enabling effect for all other acts which applicable to company, and this has been seconded by Honorable Supreme Court in a Duncan Industries Limited versus AJ Agrochem. Kripa, next. A deduction of TDS does not tantamount to payment of government dues in priority to other creditors, since it is not a tax demand for relation of tax dues. The liquidator filed an application seeking the direction. Sir, I will just brief you about this case. A liquidator asked whether when they are selling the property, a buyer need to pay a TDS. The court says ki in case of TDS is not the liability on company, not tax dues. If buyer who is buying a property and if he required to deduct a TDS as per the tax laws, he need to deduct and pay to the liquidator. He can't stop to comply somebody else. So court taken view, if somebody is buying asset from a corporate debtor in liquidation and he is liable to pay the TDS, he need to pay TDS. However, any tax payment or TDS payment which company has to do will go in the category of the waterfall mechanism. Next, whether the capital gain tax to be paid on the proceed received from the sale of the asset of the corporate debtor. Capital gain tax is applicable on the proceeds of the asset of the company. However, as this liability will be as per the waterfall mechanism, even the liability will be there. if the adequate money is available at the level 5, the tax will be paid. Otherwise, it will be just calculated and parked in a liability side if any liability is there. This is all from my side. This was the brief about the what are the impact of the impact on income tax due to implementation of IBC code and various amendment done in income tax to ensure the requirement of IBC or smooth selling of CRP process are being taken care.
There is one question. What is the tax position in situation wherein the NCLT has approved waiver of tax liability till the date of approval of the resolution plan? Whether TDS and tax liability off for the moratorium period 2 will be governed under waterfall moratorium?
See, the TDS is not a dues. TDS generally you either collect or pay to the, suppose I am paying to contractor 10,000 rupees. I deduct TDS of 1,000. So I'll pay that because it is a part of, on account of the
Running operation.
I'm making payment. This is not a dues of a department. So it's a just, I'm following a compliance. So instead of paying 10,000 to say carpenter, I'm paying 9,000 to him and 1,000 to the government. So TDS liability has to be paid. It's not a dues. So you don't fall under this. But any TDS remain outstanding on the first day of the CRP will get moratorium period. But during the CRP proceedings, if you pay any payment or if you receive any payment, it is subject to TDS.
It will be part of CRP cost. If you have a professional cost, 1 lakh rupees, you are paying 90,000 to him and 10,000 to government.
So but I debit entire 1 lakh to my expense.
Professional account. So liability during the CRP period is nothing but the you are paying the operational expenses 90% to a service provider, 10% to a government.
You are bound to comply.
Yeah, you are bound to comply.
One question out of, sorry to ask over audio because of the complexity of the question. If there is a sales tax deferral, okay, and the deferral is there.
Sorry to interrupt. The same questionnaire has added one more. So I will complete that.
Okay.
What is the tax position in situation wherein the NCLT has approved waiver of tax liability till the date of approval of the resolution plan?
What is this question? I didn't understand.
What is the tax position in situation wherein the NCLT has approved waiver of tax liability till the date of approval of resolution plan?
Yeah, so all liability got extinguished. So the dues become zero.
Okay. Yeah, Mr. Malik, you can.
No, once the deferral loan is created and when there is a time to repay, they don't repay. Then at that time, if they initiate CARP, the department becomes an FC or an OC.
OC, no? Or operational creditors. That
Yes,
we have discussed.
That has been converted, that either through CCOM or, with the locals, the state investment board or whatever, they convert it into a loan. And so in the books of accounts, it is in the form of loan and not in the form of...
Yeah. So suppose you mean to say that corporate debtor has received loan from government, correct?
Yes, correct.
So then it's a financial creditors.
But
if the loan has come, then it's a financial creditors.
The origin of the loan is a conversion of the GST payable into several years, so that's
correct.
why I asked it.
Then also correct. So when GST loan was converted into an investment or equity, whatever you say, or loan, then the nature of accounting transaction change. It is from amount, is from creditors to loan account. So if it is a loan, then it can be treated as a financial creditors.
Correct.
But
okay.
I don't think so. Government will convert anytime that government dues into loan.
Yeah.
Mr. Malik, IBC is a evolving law. पहले हाउसिंग लोन वालों को हम लोग फाइनेंशियल क्रेडिटर नहीं बोलते थे. आज के दिन में हाउसिंग लोन को फाइनेंशियल क्रेडिटर बोलते हैं. हो सकता है आपका जो क्वेरी है in due course शायद कोई तो सुप्रीम कोर्ट में चला जाएगा, then probably will decide FC है OC है.
In this
It
case,
is in your case, Mr. Malik, it is in your case?
No. I was just not it.
Okay.
this was under the
Lucky
old, excuse me, this was under the old Sale Tax Act where individual state used to give the benefits. So I don't know whether it's in the GST Act or not.
No,
Yeah,
GST Act there is no.
Correct.
Yeah.
GST Act there is not, it was the old Sale Tax Act where individual state used to give this benefit depending on you go to C area or D area for regional development.
Yeah.
So something is pending, that's a different issue, but as of now, this benefit is not available.
Devang bhai, may I add something?
Yeah, Pranav bhai.
Yeah, you rightly said, because this sales tax deferral was under the GST law, or maybe in the respective state laws also it was there, and it is finally a tax which is deferred. It is a deferral scheme, and the tax is deferred. So I don't think it is taking the nature of loan. It remains as a tax, and even today we are receiving notices for making payment or the sales tax deferral. So the department is issuing notices today also wherein the taxes have not been paid. So I don't think it will partake the character of loan in per se.
So, Pranavji, basically, it was an operational creditor before because it was sale tax dues.
Right.
Does it become
Right.
a financial creditor because it's
I
given
don't
as a
think-
loan?
No.
Or still remains
I
an
think
operational creditor?
That should continue. That should continue as a operational only.
Okay, thank you. I think
Anyway, I
Hemendra-
completed. I request Devang bhai to take over GST from this point onwards.
thanks a lot, Hemendra bhai. Yeah,
Thanks.
Devang, start.
Yeah, fine. GST and IBC are two new laws with a completely new learning for everybody, even the department, the government, everything. There are new bodies introduced. NCLT came for the first time. GST has a different council, where first the central tax and the local tax were different. Now there's a common GST body and everything. So it's a new learning for everybody in both the evaluating laws and other things. So first and foremost question comes in, is GST an operational creditor or a financial creditor? According to me, it's none, because it's an obligation to pay. You're taking it on behalf of the government. So it's not a debt per se. It's an obligation to pay. During the monetary period, you may not pay, or there may be a embargo on paying the amount, but the liability still remains. It does not go off. Pranav, you want to add something to it?
Yeah. I think the liability to pay the tax continues, of course, subject to the different judgments which are coming, that whether it continues to be an operational creditor or whether it is not a debt which per se includes a supply of goods or services. Although GST is everything on the goods and services tax on supply of goods and services. So entire GST Act is on supply of goods and services. But as far as GST per se is considered, subject to the differing views of the court, prima facie, I think according to me, it remains as a operational creditor.
So there's a question mark on that, whether it's an operational creditor or it's a liability to pay. And Pranav, what
Because
can
on
happen?
that basis, it will be decisive whether they can initiate the action under IBC. If they are OC, they can initiate, but if they are other debt, then they cannot.
So I think there is a section 82 in the GST law which prohibits that the first charge of GST. GST is the first charge on the dues of the liability of the taxpayer by the government, except those cases which are under IBC. So section 82 is there for that. So that restricts the persons who are under IBC.
There is a question. Deferral of sales tax into loan is not against the time value of money. It may be treated as operational creditor. Kindly confirm.
Yes, I think that we already discussed.
That we already discussed.
Yeah, operational.
Yeah.
It will be
Also,
operational.
yeah. Sorry. Yeah.
It's a deferred operational creditor.
Right.
Now GST, the application had the two parts to it. One is a going concern and another is a liquidation concern. In a going concern, the resolution professional has to take care of all the requirements, except they have a right, because of certain things, they have a right to apply and get suspended for the time being, and the new application as a new GST number is taken on a temporary basis. In case of liquidation, depending on the same thing, finally from the liquidated asset, it has to be paid. Rupa, next. In case of Rashmi Foods, Rajeshi Food, the question arose that advance ruling whether the discharge of GST liability on the transfer or sale of a going concern has not been addressed in IBC. Pranav, can you add something to it?
I think although IBC may not have addressed this issue, but what happens is once the company is under IBC, it needs to obtain a separate GST registration number because
Right.
it has to because of the continuing operations, the ongoing operations of the company, and then whatever is applicable to other taxpayers under the GST law will be applicable to this company also. There is no separate carve out for companies which are under IBC regarding transfer or sale as a going concern. So whatever is applicable in general to any other company which is doing transfer as a going concern or which is going into liquidation, whatever provisions are applicable, that will be applicable to the companies under IBC also. Per se under GST, if the company is being transferred as a going concern to another company, there should not be any GST liability in those cases where all the assets and liabilities of the transferor are taken over by the transferee. And it is considered to be an exempt supply under GST.
And sir, if you go into liquidation, then?
So if the company goes into liquidation, so what would be happening in those cases? Is the company selling the assets individually and then repaying the money to its creditors?
Maybe that way.
Maybe that way. So if that be the case, then whatever sale the company is making, per se, say there is an old machinery which it wants to sell, then GST would be applicable on that. There is no special carve out for the companies under IBC in such cases.
So I don't recollect, but there was one case where the court says since in liquidation you can't claim input credit that credit, so you are not bound to pay GST. It's not point. So is that relevant in this case as such?
No, in claiming of input tax credit and paying tax on an outward supply are two different aspects of the GST law.
Right.
So I don't think there could be any direct connect that whether because the company is the earlier company might have claimed that input tax credit. The erstwhile company, we can say, before becoming a corporate debtor and going into CIRP, that company would have claimed the input tax credit as GST or maybe as VAT in the earlier regime. So the credit might have been claimed at that point of time. The only question is that if it is selling the asset today, whether GST will be applicable or not. The answer remains yes, it is applicable. That GST will be applicable in such cases. Although input tax credit may not have been claimed under GST law, it might have been claimed under VAT law also, or it might under GST law, it might have been claimed by the erstwhile company, which subsequently became a corporate debtor. Still, when the sale of asset is happening, GST will apply.
Now,
So GST would be also applicable if there's a exchange of shares. I bought the asset, but I've given shares. There's no money transfer.
Shares and securities are exempt from GST.
No,
So
sir. I'm selling the company as a division and I'm giving shares of my company to them. So technically it's a sale, but I'm not getting money or cash for it.
But in such cases, what I understand is it is by way of a demerger of a division, wherein say all assets and liabilities of that demerged unit are transferred to the other unit, and against that shares are allotted.
Right, sir.
To the existing shareholders or maybe new shareholders, whomsoever they may be. So there, the entire transaction of all the assets and liabilities being taken over by the other company would again fall under that going concern, having of a division of a going concern basis. And again, it would qualify as an exempt service under GST, not liable to tax.
There is a questions in the chat box. If GST is not paid, how ITC credit can be availed by buyer?
So if GST is not paid on what?
I think sale of
Inputs or-
machinery. I think so.
So before the bond retainer period,
No, but
the
I
person
just
won't get the credit.
elaborate this question. So basically,
Yeah.
when CIP commences, they definitely at some default in the company for payment of GST as well. So there could be a possibility 3, 4, 5 months the company is not paying GST, but they are keep buying, they are keep selling. They keep sell and they do collect the money from their debtors, but they might not be paying the liability. And how their buyer, their customer of the company will claim the GST credit, because technically CRP commences whatever the liability commencing at the date of CRP remain unpaid, and department will claim as a outstanding liability. Whether
it is
the
not,
whether
ITC credit won't be available.
Correct.
The
So I
buyer.
think your
question is that why it will not be available, because department is claiming a money as an operational creditor, and there is a good possibility they may get some money out of a resolution plan. Since they are making the claim in the company, why should they not allow a creditor to whom I sold the goods?
Right. So I think there are 2 or 3 different aspects. It is different from the question that we were discussing right now on regarding the liquidation and going concern, etc. This is entirely a different aspect. The aspect is that the company which has become a corporate debtor, before going into CIRP, it had made some sales. It has not paid tax to the government.
Yeah.
But the person or the customer of that company has claimed input tax credit. So whether that person will be eligible for input tax credit or not, my answer is yes, it will be eligible, subject to the other person has claimed it as per the law. He is eligible otherwise also to claim that ITC, and he has claimed it within the time limits as per section 16(4). So I think the other person should be eligible, even though because the main problem is that since this company is under IBC, the recovery is stopped, and whatever the government should get from the person who has gone under CIRP proceedings, that government may get, may not get, but ultimately, if that whatever resolution plan comes, the government will get its share, and presuming the government will get its share. Of course, I know section 16 of the CGST Act says that the recipient of the supply will not get credit unless and until tax has been paid by the supplier into the government treasury. So here, this is going to create some litigation between the department and the recipient of the services. But I think it serves as a fair chance because the other company has opted for insolvency proceedings. Had the other company not opted for insolvency proceedings, that might be a different situation again. The other person has not paid tax and hence the recipient should be disallowed. Rather, I am of the view that even that criteria or that aspect should also be challenged in the court of law, because it is not in the hands of the recipient of the supply. If the person who is providing the supply is not paying the tax to the government has the entire mechanism to recover. It has its departments, recovery processes, so many things are there. So even otherwise also, this is the point worth challenging in the courts. If the input tax credit is not given, being given by the department, I strongly recommend that we should not reverse the input tax credit and keep our claim with the department.
So
Next slide, please.
there is another question. So basically, whether GST liability can be claimed under IBC or not, whether the collectors will fall under OC or other creditors. Again, the same question, OC or other. But whether GST liability can be claimed under IBC. Same question.
Same question. So,
And order, yeah.
so
There is one more question. In case of company is under IBC and did not file GST return for 6 months prior to IBC and company was and is under operation, whether buyers will be able to claim input for pre-CRP period for which GST return is not filed by CRP company?
I think this is what we answered initially. This was the
Yeah.
question that if the company which is going into CRP has not paid the taxes, whether the recipient will be able to claim the input tax credit. I feel if he's having a valid tax invoice, he has received the goods, he has made the payment to that company within 180 days or even thereafter. Then if all those other criteria of section 16 are fulfilled, then he should be eligible to claim the credit. I know it is going to be very difficult because the other company has not filed their GSTR 3B returns. They have not filed their GSTR 1 also. So at first officer level, the nodal officer level, there is definitely going to be a disallowance, and this case will have to be further litigated in the courts.
I believe GSTR 1 is not filed, then it's a challenge. Because if the CD is not filing the returns, then getting a credit will be very difficult.
So there's a circular in 2020 which answers most of these questions.
Okay.
So under IBC, an RLP or IRP has the responsibility of managing all affairs of the company, including filing all returns and statutory dues, including GST. The problem comes again when the previous records are not there or there is a default in filing returns before the commencement of the CRP process. So this has made it impossible for the RLP to file GST returns because the previous returns were not filed. So the current returns won't be uploaded on the systems because in the system you have to first upload the previous returns, then you have to file the current returns. Next slide, please.
Right. So Devang bhai. So in this that circular which has come, it has brought out a solution to this. To what you mentioned, I'll just further clarify.
Right.
So in the case of Videocon Industries, this point had happened since the earlier returns were not filed. The subsequent, although the company was in operation, the subsequent returns could not be filed. There, the court allowed to file it manually. Moreover, the court also allowed that even if the GSTN number of the erstwhile company is mentioned by the supplier who had supplied to Videocon, that credit should be available to the IRP, and that is now clarified in that circular of 134 of 2020 that the credit should be allowed in such circumstances because it is the IRP who will be subsequently filing the returns. And that is why a special provision has been made that in case if the erstwhile company has not filed their returns, then as per that circular number 134 and notification number 11 of 2020, the IRP will or the RP will have to obtain a new registration number, a new GST registration number as a distinct person with the same PAN of that company. So that company will then henceforth have two registration numbers, one which it erstwhile had in its existing PAN and one again in its existing PAN a new GSTN number where the authorized signatory will be the IP and that IP will be in charge of the entire proceedings thereafter. So that continuity or discontinuity of filing of GSTR 3B has been done away after that circular of 2020 and as was discussed in the Videocon judgment.
In many cases, different departments or different GST offices were behaving differently. That's why the circular 134 has come into effect.
Yeah, it's a good circular.
Yeah, thanks. Yeah, Devang.
Yeah, next slide, Rupa. Based on some judicial pronouncement, the GST department directed the GST to file with hard copy, which Mr. Pranav has already explained. However, there was no uniformity approach in this, and each department or each office were behaving in a different way. Considering the above challenge, the government issued a special notification, which is 134.
Right.
Right. Next group. Now in the new notification, there are 4 parts to it: registration, return, input, credit, and refund. Rupa, next. The new registration person shall be eligible to file the entire input credit of ITC from the appointment of the RP to the date of the registration of the first return. which is he is giving a 30 days period. So once he's appointed as RP, within 30 days, he has to obtain a new registration number. And even in the previous case where somebody has filed, he will get credit for that. For example, and according to the new registration person can claim ITC in the first return, despite the last return available or IT's lapse and other suppliers not furnish their outward supply returns. The further, take this example. In the GST return, suppose the RP was appointed on 1st April 2020, he gets another input credit on 20 April 22, and previously it was on 20 February 2020. So whatever he gets for April 2003, that is within the month, or it is within 20 days, so it is within the month when he was appointed and he applied for registration, he will be allowed that credit in the new GST number. For the previous one, it will fall under the old number and he can claim for refund. Pranavji, anything you would like to add?
Just a slight different criteria. Because since the IRP was appointed on 1st April, the circular says that whatever invoices are received after 1st April, the IRP will be able to claim it in the first return which the IRP is going to file. And say that 3rd April 2020, in your example, that 9 lakh credit is to be claimed. That 9 lakh credit, even if the invoice bears the GSTN number of the or the corporate debtor, yeah, still the IRP will be able to claim. But the invoice dated 2nd February, IRP will not be able to claim. The company itself will have to claim that.
That's because there's a PAN number is common between the two GST numbers, right, sir?
Right. No, and because this new process which is allowed only after the IRP is appointed and not before that.
Right, sir.
So since in your example, 2nd February 2020 date is mentioned and IRP was appointed on 1st April.
Right.
So the invoice of 2nd February, that the old company, the corporate debtor itself, that company itself will have to claim in that earlier GSTN number. And the second invoice of 3rd April, the IRP will claim in the new GSTN number.
So both run parallelly at the same time?
Both run parallelly, provided the other person files the GST return. Then only he will get the credit, otherwise he will not get it.
Yeah. Krupa, next. Further, the registered buyer receives supplies from the new registration number will be eligible to avail the ITC on the invoice issued during the GST details of the erstwhile registration person on after the appointment of the RLP till the date of new registration, which is granted, or 30 days from the date of the notification, whichever is early, subjected to the provision of the ITC.
That's the same thing that we discussed.
That's the same thing we discussed. The amount deposited by RP in the electronic cash register of the erstwhile register person shall be eligible for refund. He cannot adjust it, but he would be eligible for refund only if the amount has been deposited after the appointment of the RP till the date the new registration is granted. So the 30 days period is there for that reason.
Right. So, so what was happening in some companies, the new number was not taken. GST liability was being continued. It was being paid under the old GSTIN. Then, as per this notification, the government told that the RP will have to take a new GST registration number. Now the RP has already paid the tax in the old GST registration number. So both are separate numbers, separate returns, everything separate. So how to get the credit of the cash paid by the RP in the old GST registration number? So for that, the government says you need to apply for refund, but still you need to pay the cash, the tax again in cash in your new GSTN number, and you apply for the old refund for the amount paid in the old GSTN number.
That disturbs your cash flow to a certain extent.
Yeah, to that extent, the cash flow will get disturbed also because it is paid in the old GSTN.
Right.
But refund will be granted.
So may face treasury issue for some time.
Yes.
Yeah, this we already talked about.
Yeah.
Now there is a need to align GST and IBC. How are dues and the GST pre-CRP period to be dealt with? Should the GST registration of the corporate data be cancelled? Is RP liable to file returns for the pre-CRP period? Now, this all has been answered in that circular 134 of 2022. Krupa, next. Should that we already discussed, should the new registration be taken by the corporate data doing CRP person? The answer is yes. How to file returns? First return obtained for new registration. The second challenge is that how to avail ITC for invoice issued to the erstwhile registration person in case of RP has appointed before the issuance of the notice. This notice dated 31st 2020, and no returns have been filed during the RP period by RRP during the CRP period. Pranav, can you explain this?
Yeah, this is the same thing which we discussed, that that 4.5 lakh and 9 lakh.
9 lakhs is the same thing.
In your earlier example. So there is the same challenge, and it is coming again and again in various cases.
Yeah. So basically this circular 134 has solved most of the problems which previously were facing by the RP.
Right, right.
Next. Conclusion. As per IBC, once the entity defaults on certain threshold amount, corporate insolvency process CRP gets triggered, and the management of entity, corporate data, and its assets vested with the interim resolution procedure or resolution profession. This continues to run business as operational or as a going concern till the final order has been passed by NCLT for either takeover or liquidation. Previously, RP were not able to file returns because of the registered person had defaulted in filing returns that we already discussed, but after the introduction of a special provision of the GST, company under IBC, they can do so. Also removing the cap of 10%, which claiming ITC in the first return is a welcome move, but no subsequent has been specified in the requirement if the fail to take the registration. It means if the ILP fail to take the new registration, still there's a question mark on what happens to the old credit available with us, right?
Right, and also for the new, suppose the IP does not take registration now, as per this notification number 11, it is mandated that the IP will have to take the registration, and whatever are consequences of non-registration or of not taking registration, or as under the CGST law, will apply to the IP.
So you have a period of 30 days.
Yes.
From the date of notification.
From the date of notification or from the date of appointment as IRP or as an RP.
RP. So the onus of filing the first return is on the RP, so the correct and appropriate information is presented.
Right.
Next, Krupa.
Okay.
So this recent notification 134 of 23/3/2020 has solved most of the problems which were facing by the RP during the CRP process.
Right.
Thank you, Devang, for your presentation.
Yeah, Pranav ji, what will like add something? Sorry.
Only one point which keeps on happening is that say a company is already into CIRP proceedings. Say it has taken a CIRP proceedings and RP is appointed on 1st January 21. And now there is, say, a VAT assessment which is happening for financial year 17-18, or for that matter, a GST assessment for 17-18 when the company was operational, fully operational. And that notices keep on coming. So the point one is that, okay, those notices which keep on coming, whether they are valid notices or proceedings under the IBC law. And sometimes those notices get converted into an order, and whereby huge demands, crores of rupees are being raised by the officers, in spite of the resolution professional replying to the GST department or the VAT department that this company is under CIRP. So what happens in those cases? So say the actual liability was only 1 lakh rupees, which might be payable, but there's a demand of 10 crores, and that entire liability is either because of J1, J2 mismatch or because of non-submission of C forms, F forms, etc. So if unless and until that demand, either we say that the order is non-operational, it is out of question, no proceedings can be done. against the company. If that is the case, then fair enough, that order gets quashed. But what is happening, I've seen in many cases that whenever these demands are coming and these are into crores of rupees, they are getting added into the list of operational creditors in that serial number 5. And those orders are not getting, the demand in those orders may actually be say 1 lakh of rupees, but the actual order contains a demand of 10 crore rupees.
So what happens if the order is come before the CRP process starts and afterwards the CRP process is there? So what's the validity of that order?
So if the order has come before starting of the CIRP, then it will get added to the list of operational creditors due as on that date. But say a subsequent assessment is happening today for 17-18, and there's a demand being generated, so it might get added to the operational creditors. But what I am seeing is that if that is getting added, that demand actually should have got reduced because the forms are not submitted by the RP to the sales tax department. Once if they are submitted, the 10 crore itself will get reduced to 0 or maybe whatever nominal amount.
And what happens if the erstwhile form C and other form F are not filed or something and still awaited?
Then of course, if they are not available, then the demand remains. But if they are available, those can be submitted to the department by either filing a rectification application or an appeal. And the liability per se can be reduced. That is not a full liability otherwise.
Okay, thank you.
One question, sir. Since I hear there are 2 registration, one from the pre-CD and the now with the IR or the RP. Now, the IR and RP also has the best intention to see that something happens during the CIRP, right? And if there are finished goods and WIP for which ITC has been taken in the previous registration, and you still sell because the legal entity from the Companies Act perspective or any of this thing remains the same, then how do you transfer how do you account between one registration and the another registration? That means the sale is happening during the IRRP regime, but the finished goods or the WIP is lying from the pre-CIRP regime.
Right. So maybe it will depend on facts of the case, whether the old company wherein the earlier registration was there, wherein there is a stock of goods, if that company is able to sell or supply those goods to the company under the new CIRP, it can do so. And then it can claim the credit. It can because now what has happened, the old GSTIN number and new GSTIN number are considered as distinct persons under the GST law. There's a specific definition of distinct person under specific law. So you can sell from one GSTIN number of the same company to the other GSTIN of the same company. They are considered to be distinct numbers and tax will be applicable. So the earlier company can sell it to this company. It will be considered as an intercompany transfer, like we have a branch transfer concept. The same concept will apply over here, and maybe it will not get added to the total revenue of the company in the balance sheet, in the P&L account, but it will be considered to be a branch transfer or something like that as a distinct person, and that credit can be transferred in that manner. Otherwise,
I asked this because the enduring benefit of the other assets have been used from the previous CIRP, and then the whole sale value comes into the new IRRP's value. That's why I asked this question. Thank you.
So it can happen.
Okay, it was a good time-bound presentation by all, both the presenter and attending all the question in crisp manner by both the panelists. Really, lot of question you have answered in the span of 1.5 hours, not even complete 1.5 hours. It was very ticklish and complicated subject where one question was coming 3 times, 4 times in a different way, but you have attended everything very well. Thank you, Jayesh Bhai. Thank you, Pranav Bhai, for your time and your lot of sharing knowledge. Thank you, Devang. Thank you, Paliwal ji, for your presentation. And friends, this PPT will be shared, and also this presentation and this entire program will be uploaded on YouTube, Decoding IBC with Mehta and Mehta. You can very well check that. All our earlier program are also there. You can go through that. And thanks a lot, all the participants. Thanks, panel, everyone.
It's a new learning for all of us, the new things.
Yes, yes.
Thank you.
Thank you.
We have enjoyed this session also. Yes.
Thank
Thank
you.
you very much.
Thank you.
Bye.
Bye.